Hi, good afternoon, everyone. So welcome to the Credit 2.0 presentation, Getting the Full Scoop. We previously have talked a little bit about just basics of credit. And in this presentation, we're going to dive a little deeper and just look at the different ways in which credit can affect our lives. So we're going to go ahead and look at that. And right now, I'll go ahead and show you the agenda items that we have set up for today. So the agenda includes reviewing what is credit. So that's just looking at the past from the presentation that we already had set up. Second, we're going to look at building your credit. What are the different ways in which you can start doing that? Third, looking at the credit surprises. And there we're going to specifically look at the purchases that generally we do that we need credit for in order to start to understand what is the process to get there. And then we'll look at a recap, we'll look at the resources, and at the latter part of this presentation, we'll actually go into the activities portion. Okay, so what is credit? Credit determines essentially, like we saw in the previous presentation, your ability to borrow money, right? The amount you will receive from lenders, right? If they approve you, at what rate you will have to pay back that loan. And we'll add another portion here, which is if you're hired for a position, and we'll actually look a little bit deeper as to what that means, but credit does have a big impact on your life. And it's not only when you're purchasing things, but as we will see, it also does have an impact whenever you are actually at your job and you want to continue advancing on different positions. So building credit. Here we need to first understand what is it that we're planning for. And this actually doesn't have to do specifically with credit, but having a mental roadmap that we understand from the get-go is going to be crucial as we move forward to understand what are the steps that we need to do and really just breaking it down. And this part is really meant to be just more simple and understanding, having that framework and setting it up from the get-go rather than kind of teeter-tottering throughout our journey and maybe not understanding if we're making progress or not, because that can be a little bit frustrating. So the first thing is taking time to visualize what is it that we want to accomplish. And this is what I would technically call the fun part, right? Because this is where you can look at what is it your aspirations, your dreams, or your wants are, whether it's that you want to purchase a house, purchase your dream car, whatever it may be. But this is the point where you look at what is it that your goals are. The second part is now we have our goal in mind, right? Let's say we wanted to purchase a house. Well, we have to break that down into 3 different steps, which is just looking at our long, medium, and short-term goals. And that's just setting up smaller milestones that we know we have to reach in order to make sure that we're on track. The third part is now that we have our milestones set up, we now have to look at each individual one of them and understand what actions do we need to do to get to those different milestones. And this is just simplifying, and making it a very automated process, if you will, and very structured so that we know specifically what is the next step. Once we know that, we can keep on going and just making sure we are taking small steps to get to a really big goal. And the last part is tracking your process. Now that you have your map, whether it's you've written it out or you've actually typed out what are the steps that you need to take, you track your process. And the important part of this is that if you are able to track it, you understand whether it is that you're actually making progress and you're getting somewhere, or maybe you've derailed and you need to go back and you need to take a little bit of corrective action. Now, the best practices here, these are definitely not financial advice, but these can set us up to be successful as we are on our journey towards building credit. So these include establishing a relationship with a banking or financial institution in general so that we can go ahead and do point number 2, which is creating a savings or checking account. And the last 2 points here is automating our savings, because it can be a little bit hard whenever you're looking at your checking. You have to decide how much you want to save, right? Whether it is because you wanted to maybe spend that extra money somewhere else, or you wanted to go out and have fun, whatever it may be. But if you automate that process, whether it is that you don't actually see how much you're saving, but it immediately goes to your savings account, then that can be really useful, because now you don't have to go through that whole process of deciding how much do you want to take out. And then from there, if even you want to take out any money, And the last point has to do with looking at getting a raise, right? As you go through your career, you might get a raise. And once you have more money coming in, just changing your savings rate so that as you're getting more money, you can save more, and you can ultimately automate this process and make it very, very systematic. Next, looking at building your credit file. So these are some of the things that you can do in order to build that file. One is asking for an expansion score in order to determine your approval for a product. And this is a little bit different than a credit score, but using an expansion score can be an alternative for you to receive approval or just get another type of view of what type of a credit risk you might be. The second part is taking out a passbook loan. This basically means that you would take out your own money from the bank at a very low interest rate and then pay it back so that you can establish that credit. And then the last part, you might also want to consider applying for a secured credit card. And we'll actually look at the steps of that last point in this next slide. Secured credit cards. To get started, you want to just see the lay of the land. There's a lot of products available. So the first thing would be just contacting your bank or credit union and asking if they actually offer it. A lot of institutions do. Online, you can also do that research and understanding where is it that you get the best product overall. Second, you would deposit funds that will secure the credit card. And these are your funds, right? And here is really where the difference comes in. Whereas originally, if somebody were to just apply for a credit card and they got approved, right? The funds that are available there are not really yours, right? They're your credit. Here, in order to build that credit history, you have to deposit your own funds in order to secure that credit card. The third point is using that card to make purchases that you know you will be able to pay back and making payments on time every month. And this is crucial because at this point, you're trying to show this institution that you are actually a responsible person, that you do pay back whenever you use your card and you pay back on time. So understanding that this is kind of you showing that lender that you are a responsible person that's going to pay back on time. Also, one thing that you definitely do want to consider is understanding what is the period from which you can transition from the secured credit card to an actual just credit card. Because some banks will tell you, well, after, let's say, for example, 12 months that you've made payments on time and you haven't had any issues, we can transition the secured credit card into just a regular credit card. So understanding what is your timeline is very important. Next, applying for credit. And so these options include becoming an authorized user, where you essentially are using the account of somebody else and they just let you be either co-owner or just be part of their account. And here, you wouldn't really build that much credit itself. You would just get access to credit. But in reality, if you look at the other two options, like co-signing, that's where you actually apply for the credit, but there's somebody else that comes in and says, if this person doesn't pay, or if there are any problems with their account, I'll back them up. And so here you really want to be careful because you don't want to make an account and maybe, for example, you miss out on a payment, the other person is going to be charged for that. So you want to be careful that you have a really good relationship with whoever it is that you're having this co-signing agreement with. The third part is getting a secured credit card, which is what we already discussed in the previous slide. Now we are moving into the portion of avoiding credit surprises. So it's best to prepare, as credit may impact your situation where you're, like we mentioned, applying for a job, you're renting an apartment, applying for a mortgage, or purchasing a card. And we want to avoid surprises here. And so we're looking at the different things that are generally considered in the big picture in order to look at these aspects of your life. So for example, when you apply for your job, applying to credit may affect your job prospects or your security clearance. So in order to avoid issues here, you should take the following steps, which are making sure that you have a copy of your credit report from the big three credit bureaus. make sure that you read your report and ensure that there aren't any marks on there that don't belong to you. And this sounds a little bit funny, but there is so much information that these bureaus are essentially taking in. People have very similar names. There can be a lot of variables as to why someone else's information ended up in your report. And so if you see something that you know for a fact is not you, you should make sure that you start the process to take that off your report. And so correcting those mistakes can take some time. So start a couple of months early if you know you're going to start to apply to a new job or you're going to need security clearance in order to move up. Understand the process itself and just make sure that you follow the steps in order to remove these negative marks as you see them. Next, renting an apartment. And so credit reports do have a big impact on this because they show how you handle routine payments, but just as well, they give a more complete picture of who you are as an individual. Landlords also use specialty reports, which are able to give them a different picture because maybe your payments are not completely reflective as well of how you would behave as a tenant. So that will give them a little bit more information as to your rental past perhaps, and just much more targeted than what you might find in the general credit scores as well. And then the third aspect is before renting, again, pull your reports and fix any mistakes as you see that they're coming up. Applying for a mortgage. And this is not so much about the actual credit, but just the steps about what lenders generally look for when you are applying for a mortgage. So factors to consider include steady and reliable income, right? Good credit, good to great credit, really. Documents that verify that you have savings and emergency funds in the case something that is unexpected comes up. And so steady, reliable income, your banking institution might actually ask you for a couple of years worth of either tax forms or payment stubs. So if you know you're going to start to apply to get a mortgage, understand that they will look in depth and try to understand you completely and holistically. So they'll look back a couple of years back. And it's really important because if you do decide to purchase a home, then these factors can't really be built up overnight, right? Having 5 years worth of income forms, it might take some time to get through that. So understand that you need to start the process early. And then purchasing car dealers, again, they want to know about the 3 C's of credit before making a car loan. And this isn't uniquely car dealers. This might apply to the other scenarios that we looked at previously. But whenever we think about an initial big ticket item that most folks really pay for first or try to get as their big purchase as they're trying to build credit is purchasing a car. But the 3 C's include your character. So will you make the payments, right? How do you handle those routine payments? Second, your capacity. How large of a loan can you handle? They don't want to give you more than you can potentially be able to pay back. And then the last part is your collateral. How will the lender be able to get back their money if you are to default? And so the recap here, we looked at what is credit. We looked at the different ways that we can begin to build credit and the credit surprises, how to avoid them, and what are some of the steps you can take in order to begin on that journey to purchase bigger items as you continue your professional career. Now we'll look at some of the resources available at the May Center. We do have money coaching sessions, or we also, through the YouTube channel at the May Center, we have other different presentations that talk about just student loans, budgeting, and credit itself. You can find them if you go ahead and just look for Tamusa Mays on there. The last thing now is to look at the activity, which will be attached on this presentation, and you can work through it in order to learn more or reinforce the topics that we discussed. But having said that, thank you so much for participating in this presentation. I really appreciate your time, and I hope you have a great day.